All right, perfect. So, obviously we've been in this range for I think a month pretty much. And depending how you guys want to pull the fib, for myself, I'm gonna pull the last impulse up or the last impulse down, whatever happened. And we can kind of see prices pretty much exactly at equilibrium. And for those of you that have gotten through the whole course, hold on. This is really not cooperating. I'm just going to move this over. But yeah, for those of you guys that have gotten through the course, you guys obviously know that in the range, we basically want to avoid this whole middle area. And the reason being is you'll likely become liquidity. So the idea is to try take sells from here, buys from here, and that's about all we can do with the range is play the edges. Obviously, our structure is kind of messed up right now too. We are bearish. With that being said, I want to point something out. We made this lower low, and then we took a run at this high, and we weren't able to take this high. But at this point, we haven't made any new structure. But what we know about a range is a range looks something like this. You create highs, you wipe them. You create lows, you wipe them. You create highs, and our next expectation is to wipe them. And whether you follow the Wyckoff schematic or just basic range creation like we've shown in the course, a range generally continues getting wiped and then they pick a direction. So my expectation right now is to see some kind of retracement down or a retracement up. Whichever way it goes, we'll want to go the opposite way. So if it comes down, we buy. If it goes up, we sell. But right now, from where we're at, we just want to avoid this area altogether. Something to make note of right now is we have equals here. Those are usually liquidity at some point. And the next thing to make note of, apparently my undo button doesn't want to work, but we also have liquidity up here. We have equals here. Those are both valid targets for whatever you want to do. So we'll just kind of roll with that right now. Just being on our 15-minute, we have some POIs that have never been mitigated. So we're going to pull a couple of these zones across. We have a demand zone here. Oh, wow. Okay. First day back. So demand. We have another demand zone here. We like this one a lot better. This was the originating flip move. And we obviously also have the extreme demand here.
Rob?
Yeah.
Are you finding your trading view really laggy?
Say that again, sorry.
Are you finding your trading view very laggy?
My trading view, yeah, it has been laggy today. It was laggy yesterday. I don't know what that is.
I'll tell you, I kind of found a fix for it. Do you see if you click on the watch list in the top right corner?
Top right.
Next to publish, yeah, that key.
Yeah.
Click on that and click it again. And then go back to your chart. Do you find that it's still laggy?
No. Well, that was really weird. Huh.
Yeah, that's the somewhat of a little fix for now. So
that's really strange. I couldn't figure out what that was because I actually ended up restarting my computer right before this because the lagging was so bad.
Mm-hmm.
Huh. Well, thanks for that. That's actually really good to know. Yeah, so we're gonna pull all these demand zones right now. At the same time, these aren't like the best supplies because they haven't really done anything, but we're gonna pull them regardless because this has kind of been a crap range to work with, and price will likely stall at these. This is the most common question our members and non-members DM me. How do you know which zone is gonna work? I don't. I know which zones I'm going to pull, and I know the better price they are, the more likely they are to work. For those of you that did watch the second POI selection, we did get into the range volume. That can be a handy tool because usually if there's heavy volume present, you can expect something from it. And the other one I'm going to pull is this guy up here. And the reason is that's kind of our extreme, and it's got a lot of liquidity sitting below this. I've always liked these POIs where all these liquidity pools sit. We have the same thing here. You have equals here, so that makes this valid. You have equals here. Well, not really equals, I guess. This kind of swept. This POI to me is terribly priced. We're, again, not that far down. You are in discount, but it's an equal. So ideally, we want to buy off this or this or this. And ideally, we want to sell off one of these top ones. And depending what the market does in a range, one thing I want you guys to remember, if price comes down, you're going to aim for the highs. If price comes up, you're going to aim for the lows. The range generally gets wiped multiple times. And obviously, be smart. You know, if you take a trade from here and you've gotten to down here, pay yourself something. Don't just hold to the end. Nothing's guaranteed. Same with in here. If you get into a trade here and you run a high here or here, pay yourself something. We're not guaranteed to run those highs, but as a good rule of thumb, wow, just doing that watch list thing actually made my undo keys work again because they weren't working before that. That must be like a trading view glitch. All right, so we're at 5:30. We can fast forward a bit. Where are we at? 6:15. So Frankfurt Open, we like. So again, I don't know how you guys trade. Myself, this is all in the middle. I don't really want anything to do with any of that. If some of you guys have different trading plans and different trading rules, and you would enter that, there's nothing wrong with that. I just don't like to show that kind of stuff because if I do it, somebody new will think it's okay to do it. So it's to me, we're just gonna play the edges. We could probably go down to the 1 minute here. So again, whether you guys would get involved in that, that's completely up to you. Like I said, myself, I wouldn't. Just got to move a few things around here. Perfect. And what I think it was a couple of you guys that had messaged me and asking me when we're expecting full volume back. And I would say anywhere from January 10th to the 15th, we should have full volume back. Like even this coming week here, I still expect volume to be lower. It'll be higher than this previous week, but we won't have all the bank's volume back right away. And that's just the way it is. Just like in December, we didn't have our volume after December 15th. You're kind of dying. But yeah, as of this point right now, London hasn't opened. And for those of you guys that started trading with our indicators too, I was talking about these dots. People think they need to press a buy or sell on every one of these dots. I want to explain what these dots are. So the blue lines are a divergence. A divergence just means the candles on the screen are not matching what the volume is doing. It doesn't mean an automatic buy or sell. If it happens to be where a chalk and flip is off a higher time frame POI, by all means use them. But definitely do not enter on every single divergence and dot you see. And the dots are a moving average cross. Like I said, it's a very powerful tool, but if you take every single signal it gives you, you'll get burnt in the long run. And I'm sure some of you guys have figured that out. But the way we've structured it is everybody should be going through the price action part of it before we even get to the indicators. Perfect. So where are we at here? So this is kind of our, so this was the equal lows we were talking about. We are still expecting this to get run. At least I am. If this POI does hold, preferably you want to see like a V-shaped reaction or something strong here, which this kind of is technically. And if you guys are just going to enter the V-shaped reactions too, make sure they took a lot of something higher time frame for liquidity. So like this hasn't really, I guess you swept the lows here, but this is a horribly priced POI that's an equal. That's not a V-shaped reaction you want to be involved in. Now, if this happens on an edge, whether it's up high or up low, that's a V-shaped reaction you can get a little riskier on. So you're obviously still, we're still moving down right now. So let's see. So London just opened. We're still heading down. And let's see where we are actually on the. So this is a legit POI. This is a flip zone because this demand here flipped this supply here. And then we also have a flip zone down here, which I like a lot better, obviously, for the pricing aspect of it. So we'll just kind of play price along again, see what it does. I know a lot of you guys are probably saying I would have caught a sell down here. That's totally cool if you did. I personally just haven't had good luck in the middle of ranges. So just looking at this here, you guys, we did have a flip. This would be a absolute legit area to try a trade. And if this one fails, we'll take one off the next demand. Because again, we don't know which POIs are going to hold and which won't. So this to me is legit. Again, the ones below are better price, but like I said, you don't know which ones are going to go. This isn't so much an edge as it is flip zone. It's the only reason we're willing to try it. Aren't we waiting for a 15 chalk? Ideally, you would want to, yeah. But off a flip zone, I guess, how do I explain this? If you're on the edges, ideally, you want a 15 chalk. That'll get you a way more sure trade for sure. But being in the range, you're playing the edges, you're basically okay to try stuff like this. 15 chalk is absolutely safer. Like I said, this is a flip zone. I'd be willing to try this. The 15 chalk that I showed you guys in the course is absolutely a way higher probability setup. But you're also going to find, so this right here, to me, we broke this high. I would break even on this at this point. So we'll just say we took this. We're broke even on it now that we did the 1 minute boss. But yeah, you're absolutely right. 15 chalk is the way to go. And if you don't have a 15 chalk, take a 1 minute chalk followed by another supply break. So in this case, we broke one supply, two supplies. That to me is extra confidence to try going the other way too. And at this point, we broke even on that anyway. And speaking of 15 minute, so we're still coming down. So we obviously came right through that with a lot of momentum. Let's just get rid of a couple of these. And we're still coming down. So we'll just kind of wait to see where that stops. Now we have another chalk and flip scenario here. Do you guys want to try this, or do you want to wait for something higher time frame? Totally up to you guys. Let's actually just have a look at this. Like that could definitely be valid. This could definitely be valid.
Yeah, I like that one.
You like that one? All right, I like it too.
Sorry, just a comment to make, Rob, with regards to the 15-minute shocks. Yeah. I've noticed that if, as a day trader, as a session trader, if you're just doing New York or London or something like that, if you're waiting for counter trend trades to give you a 15-minute shock confirmation,
you're gonna miss trades sometimes.
You're gonna miss trades, because if price is moving aggressively towards that POI, to get a 15-minute shock on a chart, it might have to come back up 100 or 200 pips to give you that 15-minute shock.
No, not necessarily. So when I say 15-minute, that's a pretty loose term to me. Like, I'm willing to go down to like 10, 11 minutes. And if I can find a chalk on something higher time frame, like that right there instantly gave us, what is that? That's a 10-minute POI. So if this breaks here with an aggressive reaction like this, I'd be willing to try it. Whether it follows through or not, that's another whole scenario. But yeah, the 15 chalk is a loose term. Like, I will go down to 14, 13, 12, 11. And if I can find anything higher time frame to back the narrative I have, I'm okay with it. But if it's just like, if I have nothing absolutely backing me, I'll likely not touch it. But yeah, don't get too attached.
I found myself missing a lot of trades waiting for those 15M chalks.
Yeah, you will.
So if it does happen, it's awesome. It's great confluence, but I wouldn't be sitting here waiting for them all day for counter trend trades, or you're going to miss so many trades.
Absolutely, absolutely. So this is where pricing comes into effect. Right now, we could say that one of these two POIs is at the extreme of the range. So just what we showed here, let's just go back to the 10-minute actually. Right here, just how aggressive this wick is, that's a confluence to go up. The next thing, your higher time frame would be this line getting broken. So that'd be like a 15 chalk to me. It's a 10-minute chalk, but this is this is a V-shaped reaction where you can look at getting involved because your pricing is a little more extreme. So to myself, there is, if this is our last point of supply here, let's try that again. So if this is our supply zone here, so far I've been looking at 15 chalk when price reaches a higher time frame, supply and demand, and 1 minute chalk if price reaches in 15-minute chalk, 15-minute supply or demand. So there's generally we're not in a range for a month. So if your price is trending and you're priced well, you don't need to wait for a 15M chalk to go with trend. Now, if price is in a range, anytime you're at an edge, you can get a little looser with the rules if you have other confluences. So other confluences being like V-shaped reaction here. We have a flip zone right here. Now, it depends how you guys look at this. To me, let's see what that looks like. So you kind of have that doesn't really show anything either. So there's, to me, that's kind of your range that caused the break. You can actually even see it on the 1 minute. If these little candles have any wicks on them, they're usually the area on the seconds that cause that. this would be a legit area to try. If you're really smart, you'll probably cover these low wicks. I don't. I'm okay with taking a loss and re-entering if this candle doesn't hold. Because ultimately, to me, this is the candle that pushed it through. There was a range on a smaller time frame. Usually this candle is an inside bar. It's not right now. But we'll just play forward. So there's your bit of reaction. Now, this is definitely a riskier entry, but you did have some confluence for it. We did have a V-shaped reaction on the higher time frame. We had a wick that was as big as the body. That means the sellers got beat out hard. For those of us that do want to wait for something higher time frame, that's totally cool. Like, you do not need to feel rushed. This is an entry I would take. Something I want you guys to know about this. This entry will fail a lot more often than if you wait for that 10 or 15 chalk. So ultimately, there's your 10-minute chalk there for those of us that do want something higher time frame to go off of. So depending how you look at this, we could say you have another flip zone here. And this is where Euro's really forgiving. Euro might be nice enough to come back and give you another entry in this. You could even say as far as, if you want to look at it the other way, was you could say this is the range you were waiting to break. That was our 10-minute supply. And you could say this is the reaction point. A little bit big. Let's see. Well, let's try that again. But yeah, like I said, guys, play with your time frames. When I say 15-minute chalk, it is a loose term. You just want something higher time frame. So if this is our reaction point, this high point, right away, it's what took out that reaction point. And to me, something in here did. So this right away becomes a valid zone. This is probably a safer trade than what we entered at the bottom. And by safer, I mean you just broke a 10-minute point. This is a higher time frame back trade, I suppose. Like I said, I take these all the time, but they do fail more often than waiting for something higher time frame. And that's where your psychology can play a big part. How many losses can you handle? Can you take 2 hits in a row and enter a third trade? If you can't, then wait for something higher time frame to back you. So 2 pips, it's pretty legit. You break this high, you can go break even. So we're still in that. So you are showing willingness to go up. Like, we did take out this high. I want to see this high go. Because if we, let's see. So something I want you guys to note too, look at this wick here. That is the sellers losing control. The buyers started pushing back on this candle. And then the next candle following it, once again, you have more wick than body. So the buyers are pushing again. The next thing you get is the sellers tried to push this price down one more time and the buyers beat them out again. So right here, you have 3 higher time frame candles that basically the buyers beat out the sellers. The next thing, you get this kind of a doji and you're not really sure what to do with that. The next candle that follows it, look at the body size. And this is where, when you start measuring momentum, you want to see some kind of candle body size, and you want to see wicks the opposite direction from the way you're looking to trade. So we got wicks to the downside. We got a big body going up. this is looking good right now. We got a V-shaped reaction. I'd feel pretty comfortable taking this to something higher. While we're on this too, let's actually pull this supply zone because we'll likely see a reaction. Now, if you took both of these positions, you'll definitely want to pay yourself at this supply. If you took one of these positions, you might look for something a little higher. This all depends how you guys manage and how you want to pay yourself. So we broke even on one. For the sake of this trading session, we're just going to say we took both of these. So, and myself, I like to be anywhere in that 1.5 to 2.5 pips if I can help it. I rarely like to be in a euro trade with 3 pips or 3.5 pips. Like, I'm not a fan. I'll do it. So this area is 1.3 pips. Like, you could safely give it, 1.7, 1.9, something like that. If you're really smart, like I said, you'll cover these wicks. That'll pretty much guarantee you staying in this trade, even if they come down. So just holding to here, that's a 10R. Like, if you're in both of these trades, you'll likely close one right out. This guy too here, I think I'd break even on this once we took this high. This guy here, I want to see this high go, and then we can break even on it as well. So have you gone? Yeah, that one's gone. So we can break even on that. Something I want to show you guys too here is you actually have another chalk here again. So this is a high probability area to get tested. If you see something like this and you did break even and it takes you out, you can jump back in or you can leave your stop open because more than likely these areas do get hit on euro anyway. So that right there broke us even. Myself, I would look at this as the next POI and re-enter. And if that takes us out, well, you're still in your original position. And the reason that I would take this again is it's still a flip zone and you actually got a bit of a range. So you're basically in the same price. And this is where I said your management comes into how you guys manage. Myself, when this high goes, I will break even. So that trade right there would have 100% took me out. It does screw you once in a while, but in the long run, you're better off breaking even than losing. But don't be afraid of re-entering something like that. Like I said, in a range, we play the edges. And this is the kind of stuff you want to see. So look at our candle sizes. We're kind of small coming down. You tap into this zone and immediately you get 2 large candles. This to me is, again, gets me confidence that this direction should continue. Not guaranteed, but I like to see big candles. I like to see long wicks the other way. It's good to have one of the two or both if you can. Now, coming up this week, euro might still be not the greatest for the first few days, but the following week, I think we should be back to normal. So that right there, again, candle sizes, lots of momentum up. Like, I would have zero worry in holding these to at least the supply. Depending how you guys manage, if I was in both of these, I'd probably just close the first one right out. The second one, you can do something like 30% partials, leave the rest, or you can hold the whole volume. However you want to pay yourself, have areas where you're going to pay yourself. Speaking of paying ourselves, let's say we close the first one right out. I would say these highs here, since you already paid yourself with the first, I'd be more than happy to hold into this zone. So this is kind of our equilibrium too. And you could take partials here And then your final TP would likely be this high pool liquidity here, where you'd probably close out the majority of your position. And being that we're in a range, wherever it stops, you could basically look to trade the other way. This one's been kind of an extended range. And something I can tell you about this range too, guys, this range has been accumulating for a month. Right now, it looks like they want to take it up. If it does go up, it'll likely go up for quite some time. If they take it down, it'll likely go down for some time. They just spent a full month accumulating these position sizes. So you could pretty much bet your ass they're not just going to dump these positions quickly. This will be a long-term swing trade, you know, on the weekly, on the monthly. But just from looking at this, again, guys, TP1, TP2, you should be fairly safe to hold this. Those of you that are fortunate enough to trade London, you're going to get bottoms a lot more often than New York people will, and tops. It's just the nature. So first one hit TP. This one closed right out. I think we broke even on 2 as well. And you're kind of in that dead volume time now too. So once you get kind of closer to that, Rob, when are you adding NFT content to the community? That's actually got nothing to do with me, man. I'm staying right out of crypto. Steel will be adding all the crypto knowledge to the community, and we are currently working on the course. It'll likely get dropped when the whole thing is complete. We're not just going to be like, here's an NFT video. He's going to go through the whole concept. What is blockchain? Like, what different types of blockchain, how they work, what they are. That way, we're not just like, here's an NFT, guys, because ultimately you'll get burnt if that's all we do. So it'll be basically a whole crypto thing that gets dropped together. And I don't want to put a timeline on it, but just know that we're working on it. And when it's complete, we'll drop the whole thing at once. And it'll be a lot better this way if we drop all the knowledge at once. Because for a lot of people that have never touched crypto, the worst thing you can do is be like, here's an NFT, here's a site you can get it on. There's a little more to it than that. So if you notice the time we're at, this is 11 to 12 London time. Very dead volume. And while we're here, also, something I want you guys to make note. We never actually properly had any sort of reaction to this. And this would be a breaker block. The reason we're still pulling this across, look at the interaction in the, man. All right, let's try that again. I have a new mouse that I bought, and I've been having issues with it. Look at the interaction we got here. Price never did anything like this, where it came into here, reacted, came down, then went through it. Price just kind of came right through it. And then the next time we came up to it, we still never really interacted with this zone. We came through it again. With these breaker blocks, at some point, there's going to be some kind of interaction. Now, one of two things can happen with these breaker blocks. A, you build a trade off of it where it comes into here and it goes up. Or B, it's going to do something like this, go up, and then it's going to use this as inducement and come down to the flip zone below and then go up. So be really careful with these breaker blocks. They're great to take a trade off, but a lot of times they build inducement. I find them more common on GU, which actually has been a better pair than Euro this week. Of course, as soon as I stop trading it. But that's all right. I've actually been finding quite a bit of opportunity with Euro now, especially just looking on the seconds time frame again. I've been able to spend a lot more time on the seconds just looking at the one pair. I know when I was looking at 2 or 3 pairs, I wasn't really able to sit on the 15-second on a couple different pairs. This whole mess here, I wouldn't probably touch that at all. With that being said, like I'm still looking to take this up, being that the range basically bounces from one edge to another. Like I said, find your edges and go the other way. Find places to pay yourself. So we do get a bit of a divergence forming here. So here we're heading into anything past 12 o'clock, you're gaining volume again. We did get a chalk and flip here. So you kind of have 2 spots here. To me, I would say this candle caused the break. The original one was kind of the reaction point. So on the 30-second, you can actually narrow it down to this little doji, and it actually already got tapped. But for the sake of the 1 minute, let's just try it anyway. And for those of you guys that did trade Monday and Tuesday, I think you guys noticed, whoa. All right, so we took a loss on that one. I think what you guys would have noticed is the market's been acting quite strange, and that's the lack of volume. Okay, so we took a loss on that guy. Totally fine. We got a V-shaped reaction here. And ultimately, I would say, let's see. So something in these 2 candles caused this flip zone. So this would be just one of those losses you would absorb. And that's area 1. And area 2 for me would be this doji. A little bit big. I could see a chalk. Yeah, exactly. Yeah, that's a chalk. 100% that is. And I know a lot of you guys think well, I shouldn't say a lot of you guys, but some of you guys message me and like, so for me, sweeping these lows and sweeping these highs is a chalk. For some people, they want to see this point go for a chalk complete, or some people want to see the swing point go. There is no wrong or right. Some people trade break of structure. I trade break of supply or demand. You have to find what works for you. I prefer break of supply or demand, but I can tell you right now, if this point gets broken, there's more authority behind the push up than just this move because prices travel that much further up. So that, again, is something you have to decide for yourself. For me, I found break of supply and demand works better. I have a buddy that literally refuses to trade break of supply and demand. He trades break of structure only, and he's a great trader. And that's just what works for him. So we'll put these guys in here. How big? You can actually probably, we'll just take a full 2 pips. And we'll say we took 2 pips on the bottom one too. If you can, cover some of this wick. Even cover the whole thing, totally up to you, but a lot of times the wicks get filled. So again, you get another chalk inside this little 1 minute POI. So this would be a chalk on the seconds, which is totally fine. We like seeing these. You don't need to re-enter. You're still in a position. You have one here. Let's actually just look at something. So this supply here, do you guys see how we candle body closed outside of it? That supply, that zone's been wiped. So which means we can move our supply to the next zone. So again, you got wicks to the downside, and then you got a momentum candle up. We like seeing these. Your wick got filled. That's always good to see. Could you say there is trendline liquidity? I would say up here, yeah. I would say this is trendline liquidity. This here, I don't know if I classify this as trendline liquidity, but I would definitely classify this as inducement here for a future move. Yeah, I don't know what's up with TradingView. It's been lagging really bad. I was actually trying to make a chart the other day, and some of my typing and backspacing wouldn't work on it. And I don't know if they updated it or what it is. A bit to the left. Were you talking? Are you talking like over here, up here? This is trendline liquidity, or are you talking at this stuff down here? Yeah, that's definitely trendline liquidity. And this is the middle of the range too. This stuff always gets wiped. It doesn't matter which direction you go, it does get wiped. Ultimately, just stay out of that zone. And if all price does is sit in this zone the whole session, just don't even touch it. You're better to sit out a trade than to take 5 trades to get one to go, because all you're doing is covering your losses. Usually I'd say 3 or 4 days a week, Euro's pretty decent. If you get on the seconds, you can pretty much find a trade every day, but don't do that till you're consistent on the 1 minute. So we can take this one higher up. There's your momentum. We like seeing these. Also, something I was going to mention too, if you guys see flat tops like this with a lot of wicks, that's a weak high. And the reason it's weak is a properly formed high would be price comes in, price leaves, V-shaped reaction. That's a strong high. I would be looking to trade away from it. When you get flat spots like this, that can be a confluence that price should continue that way. Don't let it be your only confluence, but these are poorly formed highs to me. Anytime you see a wick or price move aggressively away, that's the stuff we like. That means the banks are there. They're taking orders, which is why I've actually been market executing a lot more too, just on momentum and wicks. Again, you could say this is, again, a poorly formed high. Chances are it will continue on going through. So definitely get rid of this one. You could at least hold to, I would say you'd be at least able to hold it to here. Like these large pools of liquidity always get wiped. No, it's not guaranteed, but in this case here, we're paid from the bottom. Obviously, this isn't a realistic scenario for a lot of us because a lot of us don't get to trade New York and London together. Usually, you're fortunate enough to trade just one. For those of you that do get both, you're very fortunate. I would trade London if it didn't, if the time zone wasn't so bad for me. But yeah, again, poorly formed top. You're getting a sell signal here, but in reality, do we want to sell? No, we don't. So you're still got pretty decent momentum heading up on the 15 here. So you do have, I guess you haven't broken through yet. So this next candle kind of broke through. there's probably another buy inside a flip zone somewhere here in these wicks. The only thing I'll say is you're dead middle of the range. If you're in a position, I wouldn't look at getting involved into anything. If you're not in a position, or you're up quite, decent on the day and you want to get risky, there is likely a trade somewhere in the flip zone. We can go back, revisit this once we see what it does. So let's see. So this is kind of a weird one. You could say there's something within this candle and these wicks. Maybe even this doji. Let's just see. I'm curious. No, you don't need to get involved in that. I'm just kind of curious to see. Yeah, I would say there's possibly something in here. Would I take a trade off that? Probably not. So there, you tapped your POI just barely. You do have a chalk and flip too. Not the greatest chalk and flip, but you swept the lows, you swept the highs. If you guys are diehards, you probably look for an entry into here. You definitely have a chalk now. There's your tap in. We're not going to say we took that, but that is a legit chalk and flip off a higher time frame POI. You didn't touch it by much, but it's there. The only thing I'll say about this is you're going right into a supply and you don't have an opportunity to break even. So I wouldn't be a part of it. Whereas down here, this trade here, you're pretty far back from a supply. And I think the last supply we deleted was somewhere around here. You can at least break even before you're heading into a supply. So you can manage that trade properly. This right here is a horrible place to get into a trade because it's poorly priced and you're literally half a pip or a pip from a supply. So if you can help it, don't be in something like that. Even though they do work. You wanna, it's not so much should I get in this trade and where can it go? It's how fast can I manage this trade and break even safely? Is there any travel distance between where I'm getting in and the next higher time frame supply? Cool. That gives me a chance to break even. So at the end of the day, you're just managing risk. So we're obviously getting a hidden divergence showing a continuation up. At this point, you wouldn't be buying, but let's just go to the 15 here. So myself, when we hit this pool of liquidity or even this supply, I would likely take 80, 90% of my positions off or even close one entirely, close the other one like 80 or 90%. And you can maybe leave a little 10% runner to see if you'll take the high. Usually a range, you take the highs, you take the lows, and you go from one edge to the other, but it's not always guaranteed. So like I said, have a plan to pay yourself. Don't shoot for the moon. This one's definitely done its job. You hit the large pool of liquidity, and usually when you hit those, there's a good sized pullback. So this is still going up. Like I said, guys, we wouldn't be looking for any buys in here at this point. You likely will. Let's see. So I think this one here actually mitigated the last unmitigated supply. The reason I say unmitigated, it's kind of barely been tapped, but you could say it's like lightly mitigated. I'd like to see price come into it a bit. All right, there we go. So in a range, it's always find your liquidity, find your unmitigated areas, and find the edge you're going to run. With a little bit of luck, we won't be in any ranges for a month, and everything from here on out will be a little shorter ranges. It should be. I imagine they acquired a pretty good position size in the last month here in this range. Oh yeah, this is the one that made the high. Okay. So you did make a new high here. Let's see. Oh, this is 15. I was wondering what's going on. So that's pretty much your session over anyway, guys. But again, this is another one of those things. You see a V-shaped reaction like this. You start seeing candles like this. You just took a high. You can execute a trade. For me to get into something like this, I'd like to see a V shape, and I'd like to see probably at least 2 demands go. And then I'd like to see some kind of candle get engulfed. So like up in here somewhere would have been a decent area, depending what time it is. Let's see. So 1600 London. No, I probably wouldn't have touched that. Just the time it is. We lost volume. But if this was an hour ago when this V-shaped happened, I probably would have shorted that just because of all the liquidity it grabbed. And we obviously did start building a divergence back here where the volume wasn't matching the candles. V-shaped reaction, Gulf candles. You have 2 demands that broke. If this was better timing, you definitely could have shorted that. Being that it's not, obviously not. And if you caught any one of these buys, I don't think you would have been too worried about shorting. So that was actually a decent day. This is the day I actually slept in, but yeah. Do you guys have any questions? No, nobody. All right.
I do, Rob. I do.
All right, go ahead, man.
Hey, Rob, how you doing? Happy
Good,
New
man.
Year's,
How are
brother.
you? Happy New
Good,
Year's
good.
to you too, bro.
Can you just elaborate on your second entry again? How did you came in? Did you look for
London?
Yeah.
This guy here.
I think so. Yeah, that one.
Okay. Yeah. So we had a flip zone right here. So we took an initial entry here. We broke even on that one, right? And we said what we had here was another flip zone again. So let me just draw it out here. So this was another supply zone. And you basically came right through it with a lot of momentum. When I say a lot of momentum, look at the candle size. So you got wicks to the downside, a little bit of a range, and then it just blows right through it with a big candle. So these ranges are a flip zone. You technically swept the highs, swept the lows, you broke through. We were saying if this does come down and break us even, this would be a valid area to re-enter. I think this got dragged up on us somehow. But something like this, you can totally re-enter. There's also another way of managing too. If you were in our original position here, once it went 4R, which would have been somewhere around here, you could partial out 20% of your trade and leave the stops open. That's what I used to do with Euro, because Euro's notorious for doing this, where it'll go 4 or 5R and come back. So that's why I show both ways of managing. Myself, I usually just break even and re-enter, because I'll likely see something on the seconds here. Let's actually have a look. But it's just it's a valid flip zone, right?
Yeah.
So let's see if there's anything there. So you basically, right when this came in, so if I was not to take a limit and I was to market execute that, soon as see that wick that, hold on, let's move this. See, I'm going to delete this to see the last gray candle here. That is the last form of supply. As soon as we wicked above that, I would market execute that and just put my stop down here.
Okay.
So that's how I enter on the seconds. But You could also set a 1 minute limit. Like I said, it's a very valid area. You could have market executed again here when you smash through this supply. So pretty much as soon as this candle happened, you could have, market execute, go right below this inside bar. I don't like teaching seconds because when you're ready for it, you'll likely figure it out on your own. But it's the exact same concept as 1 minute. But yeah, anything that caused a flip and we went through that supply with momentum, that area could get tested again, especially considering we got inducement here.
Okay. Thanks, Rob.
Yeah, you bet, man. And like I said, if you don't like doing that, just take your first position, partial out 20% at 4R and leave your stops open. That would have kept you in the trade without having to re-enter.
Right.
Yeah, totally up to you, whatever works. Does anybody else have any questions? What do the V-shaped areas actually tell us? So the V-shaped areas are a very aggressive reaction. And basically, so if you look at these wicks here, the only people that can create wicks in the markets is the banks. So if you look at this high right here, this is a very poorly formed high. It's flat. These usually get run. Anywhere there's a V-shaped reaction and there's wicks to that downside, that usually tells us the bank injected money into that area. It doesn't mean you just see one wick and you press buy, but if it, if the pricing lines up, if you had a flip, if you had a chalk, you're at the extreme of the range. Well, now this becomes an okay area to try. And if you don't want to try, be like, okay, well, we had a V-shaped here. We get another flip zone here. I'll try something here. V-shaped reactions essentially just tell us there's BFI presence. And if there's no V-shape or if there's no long wicks, usually look. So this is another example of a V-shape here. There's a bit of a wick, not as long as we like, but the next thing that follows the black candle is the size. Look at the size of the bullish candles. That's BFI presence. Only they can create candles that size. Only they can create wicks. Only they can create momentum. So that's a footprint of theirs. They can't hide because of the volume they're injecting. So we're basically like, okay, well, we think the banks are here. We're going to try a buy here. So that's how I look at it. That's how I was always taught with the V shapes. And even a lot of swing traders, you'll notice they like to enter on what they call the 15-minute pin bars. Well, 15-minute pin bar is generally a V-shaped reaction because only the banks can create pin bars. So that's all it is. It's not something where you guys should just be like V-shaped reaction. I'm going to press buy. There's got to be a little more to the story. But yeah, that made sense. Yeah, you guys are all good. Everybody was going to get an email in a little bit here to sign up for Wednesday's Q&A. I'll get this uploaded to the website shortly. And if nobody's got any more questions, we'll end this one here. And we'll do another one of these every Sunday from now on. So yeah, I hope you guys all had an awesome New Year. It's going to be... you're welcome, bro. It's going to be a really good year, I think. We've put forward a lot of knowledge. We've added some extra things to the initial system, like the indicator and stuff for those that chose to use it. And I'm pretty excited to see where the year is going to take us. You bet, guys. Thank you all for being here. And yeah, again, Happy New Year to all of you.
Thank you. Thanks, Rob.
You bet, guys.
All right.
All right, guys. Well, I'll see you on Wednesday or next Sunday. Have a good day, guys.